So dollar yen looks interesting to me on the short side. We have some pretty strong. Wow, look at this, guys. I did not recognize this. Japanese yen took the #1 spot on bullishness for the COT data. COT data history. Let's look at Japanese yen for a second. This is incredible. Look at this. The Japanese yen went from the most bearish on the Edgefinder's COT tracker to now being the most bullish. That's amazing. Like, it changed pretty quick. Like, once institutions decided they were going to be long Japanese yen, you can see, well, actually, I take that back. Not quick for retail, but quick for institutional money flows. You can see once institutions decided they were getting long Japanese yen, it happened within like a 6-month window. But that's how institutional players do it. They accumulate and distribute over large stretches of time that retail does not usually operate within. Like, retail traders are not usually buying something over the course of 6 months. Does anybody do that? Does anybody, well, I mean, I do a little bit of that in the form of dollar cost averaging. Anybody accumulate like that, like over like large stretches of time? I know one very popular way to do that is you have a list of stocks that you like, or maybe it's gold, or maybe it's silver, or maybe it's the index, whatever you do. Like, a lot of people will invest regularly into something. Like, they will, that seems to be like how investors on the institutional level seem to move. So we can see by looking at the Japanese yen, which we've selected in the top right here, we've selected JPY. So the Japanese yen, they've been building a position long. See this yellow line? This yellow line, right? Long percentage. That line is moving up over time. But you can see it's not happening all at once. It was happening very quickly during that August freakout that we saw last year. Then it paused, and now it's jumping again. So we see institutions accumulating more Japanese yen. How's your gold trade going? Yeah, so I'm giving back some on today. Let's take a look at down 1.16%. But I still like gold. I think it's you had a 3-day heat streak for gold. So we're seeing a little bit of give back on the day. My stop loss is below the 31.25 level of support. That's that previous level of resistance, now turned support, potentially, right? We want to see that level hold as support to stay in the trade. So what I'm also looking for on this gold move here is higher lows. So let's just say, for example, that we get this kind of move here. Like, let's say we get a pullback, and then we do actually end up doing one of these guys. What I'm going to do is I'm going to tighten up my stop loss further. Like, I'm looking for, even if we don't go back, we might do one of these. Like, this might be the low of the day. Let's just say we push higher from here. That would give me an opportunity to take this stop loss and to trim it higher. Basically, now my point in this trade, I'm at the point where I'm simply looking for opportunities to continue to lock in more profit until it shows true signs of reversal. Okay. Sorry, guys, my chair keeps going down today. So yeah, that's pretty much on gold. I mean, I think it's due for some intraday pullbacks. But as I've been saying for a long time here, as a broken record almost, I don't think gold has to have some major sell-off. Maybe it does if you get further trade, negotiations that go well. Maybe a huge catalyst for bears would be if China and the U.S. basically just shook hands on something. Gold would probably drop pretty hard, and I would probably take profits on my trade. But I still do think that even though trade negotiations overall will be okay, I think that there will be good news to come out of all of this. I also think that will take time, and that uncertainty, I think in the meantime, will continue to support gold prices going higher. But we'll see. If we don't, again, I let price tell me when it's time to get out. If we come down, fail, I'll take profits and move on to the next trade. Peter Schiff believes gold. Look, I love Peter Schiff. I listen to his stuff sometimes, but there's never been a time I've ever heard him say something bearish about gold. So take that with a grain of salt. Right? When you're listening to people, and again, I like Peter Schiff's stuff. I think he's a very smart dude. But you do always have to take everything with a grain of salt when you're listening to commentators, because everybody has their biases. Like Peter Schiff he's a gold bull. He also has a company that sells gold, right? So of course he's kind of always going to be bullish gold. And once it hits 3,600, he'll say it's going to go to 4,600 and then 5,600. And so, like, you do have to remember people's alignment. I'm not saying that Peter Schiff is, he's a very smart dude. So, I mean, I listen to his podcast pretty regularly. So I agree with him for the most part. But you do also have to remember, like, predictions you have to be careful, right? Because I could say, like, oh, I think gold's going to go to 10,000. Someday I'll be right. So eventually gold will be at 10,000, almost certainly, on the US dollar. But it might take 100 years, might take 10 years, might take 2 years. We don't know exactly when. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. This is just one of the most extreme examples in my trading career of sentiment getting extremely one direction and then completely, beaten up on the crowd. It's something that you see happen in markets pretty much over and over, is the crowd sentiment when it gets really, really extreme. The market does an amazing job at taking money from the majority of people and giving it to a small subsect of people. It's a crazy concept. But yeah, I mean, Alan says bears got squeezed, in my opinion, with premiums getting so high. I mean, Alan, straight up, yeah, that's you know who the winner in all of this recent volatility is? The market makers. So check this out. If you are somebody who trades or watches the options market at all, you know exactly what happened here. You had massive put and call buying. Now, when the VIX gets very high, what that means is that the market, like the crowd, believes that there is likely to be very large swings in one direction or the other. So when the VIX gets really high, what that's saying is that people think there's going to be a huge move higher or a huge move lower going forward. Now, market makers, people who short calls and short puts, which is something that I personally like to do. The beauty of that is that most of the time, the market moves less than the worst case scenario. And so if you were to, for example, sell people puts down here or sell people calls up here 1 week away or 1 month away, you collect a premium for doing that in the options market. Now, this does have relevancy to everyone here watching, so bear with me. But when everybody expects huge moves, the premium gets very expensive to buy calls and to buy puts. So last week we saw puts and calls get very incredibly expensive towards the lows of this move. And so you had one bounce back for a week or so. One bounce back, and all those people who bought puts, who threw up, a couple $1,000s betting that the market was going to crash, that money got liquidated real fast, right? So when you have these scenarios where everybody gets fearful of a market crash all at once, historically, those are pretty good times to buy the market. Why? Because everyone expecting something oftentimes causes something to not happen in markets. It's fascinating how that works, right? When everybody thinks, oh, the stock market is going to go down to 4,000, when everybody thinks that, right? When everybody thinks it's going to go dropping like crazy, the market has an amazing ability to take their money collectively very quickly. And I am by no means saying that I knew this thing was going to do this, right? I didn't know we were going to have this sharp of a bounce. I didn't know where the bottom was. In fact, if you watched my videos, I bought the NASDAQ, tried to take a long position here and stopped out. I also have been buying stocks since around this 5,800 level on the S&P. So I bought stocks, I bought more stocks, I bought more stocks, I bought more stocks. And I did buy some pretty heavily last week. I didn't know where the bottom was. And those are long-term holds for me. So it's not really like I can't really say, oh yeah, no, I knew the bottom was going to be right there. So I'm not calling that. But one thing that I've learned over the years is you don't mess around with a put to call ratio that looks like this. In fact, this might be an eye opener for some people out there. When the put to call ratio gets this extreme through history, it's almost through history. This is not guaranteed going forward, but through history, it's almost 100% chance that the market actually goes up. It's amazing how that works. What about Aussie dollar longs? Yeah, I mean, so on the top setups page, we've got some interesting stuff to go through here. You've got euro dollar, pound US dollar, the Australian dollar, Kiwi dollar. Look how bearish the US dollar is compared to most charts here. And if we take a look at the economic data scores only, and if I just look at currencies for a second, you can see it is very strongly tilted towards staying bearish the dollar within the edge finder. So dollar yen, dollar CAD, dollar Swiss, these are getting negative scores. The Australian dollar, the euro dollar, the pound dollar, the Kiwi dollar getting positive scores. So for the currency traders out there, I am looking for more upside on things like euro. I took a profit on euro and Kiwi dollar last week. So if we get either kind of one of these guys on the Kiwi dollar, I'd like that trade for possible entry. Or if we reverse, if we actually go back down to these lows, I may look to start another position on the Kiwi dollar. So I've got euro dollar in my scopes. If we get a pullback down into like 1.092, pound dollar, kind of a wonky looking chart, but I would like a retest to this area, this 1.2750 zone. This area, I may start a position on that one. Australian dollar, similar to the Kiwi dollar, either a retest to those lows or a breakout above this 6,400. Dollar CAD, if you get a jump back up into these resistance points, somewhere in this region, I'd probably look to start a short position. So we'll see.
S&P is up. We had a big gap to the upside, about 1+%. So I think that, look, the market right now, based on this kind of bullish seasonality, a little bit of this 90-day window, the market caught a little bit. And the first one, and this is either setting up for some type of bullish pattern where maybe the market does in fact break highs, or this is just all the drama, a relief rally, and then we have more chop. The bears could, work their way back down into ugly levels. We could revisit the lows again, which I think investors are genuinely concerned about. This all happening in the wake of earnings, which we had earnings just kick off last week of financials. We have more this week. Let me show a screenshot of what I have for earnings. So this week's earnings, some of the notables, I would say Johnson & Johnson, kind of not related, but what's going on in the healthcare space, because we had pharmaceutical tariffs coming in, that was hitting Johnson & Johnson really poorly. The last week of price action, more financials, Bank of America, Citigroup, PNC, grocery stores, kind of the sign of the consumer. How are they doing? Tight margins in grocery stores. Equity bank shares. We've got, let's see, transportation. That's going to be an important one to watch. Again, not a super volatile stock. Interactive brokers, traders in general. CBOE stock does pretty well. United Airlines, super sensitive since we've had a couple of crashes, and then, worried about growth concerns. Bank of America. So just a lot. I mean, we're just getting started. Earnings season just getting underway, and it's a lot in the financial space. Here's more financials. Here's Bancorp, Abbott Labs, Progressive Insurance, Travelers Insurance. I'm sure they're going to do just fine since they've upped their price policies by 50%. Citizens for financials, First Horizon for financial. That's regional bank stuff. Alcoa, that is your aluminum maker. You got banks, more banks. Thursday, United Health Group, more banks, Huntington, Consumer, American Express. Aussie CAD making a nice little comeback into this pocket around 8,900. Probably more to go. I just like Aussie CAD for the lows. Buy the lows, take profit at the highs. Even willing to dollar cost average into these lows at 82 and 8,100. I don't know if we're going to get there, but still being willing to kind of just scale in and take some net profit. Aussie Swiss looking a little bit better. Big pockets here around 5,500. Positive swap. I'm going to wait and see. I want to move some of these buy stop orders down lower, but what I'm going to look for is, do I have a bullish pattern to trade? It's very possible that with all the shakeout here, we have this dump, this pullback, a revisit of the lows. This might be a bottom here to then trade, so I can get a little more aggressive at the lows. Or if we go dump here, maybe a fresh low with some divergence, and then we spot a pattern and then trade this thing back up into this resistance area. So these buy stops are likely going to get shifted lower. I'm just going to wait a little bit for some clarity and confirmation on whether or not I can kind of call this low area with some confidence. Aussie JPY, we breached the lows, but it's not a huge surprise that we did so with inefficiency. We did so with getting oversold conditions and the market's bouncing back. I still don't love the Aussie yen as a trade. Aussie New Zealand's, I'm just going to hang in there and just let this one ride out a little bit. Dollar, Aussie dollar. If anybody was long, so I've got some positions running. I bought it at 60.20. We're trading at 63. I think I'm just going to go ahead and take profit in this one. So 60.20 buy trade, closing out at 60.23. I'm going to take my 300 pips and move on. So 60.20 to 63.24. Let's take 320 pips out of that one. Or I guess it'd be 304 pips. Yeah, I'll take the profit. Okay, so that was a plus 304. Buy at 60.20. Closed at 63.25. So 325 pips. Just taking the winner. What would I look for next on this one? Well, if we go from low to high and we chop around here, I wouldn't mind looking at some buy stop levels. If the dollar's going to get weaker and this Aussie benefits, from 64 to 6,900, that's a lot of open space on the Aussie dollar. But if it is, up here for recovery, chop, moving back down to the lows, I'm not ready just to buy back in yet. So I'll take the profit. I'll move on. CAD Swiss, same thing, similar to Aussie Swiss. I've got buy stops up here that have not been filled. So I'm looking for, how can I spot some lows? If we're here chopping around, I'm going to start looking for bullish patterns to emerge, and I'll start shifting these lower and then scale my way into a buy trade eventually on CAD Swiss. I'm looking to add more to it. CAD Yen, be careful bouncing off these lows. Wouldn't be surprised if it's range bound in the next few weeks. So just watch for some of that risk. Swiss Yen, right back where we started. I would say, I'd stay out of this one. The only spot I'd look for on Swiss yen is if we turn hard here, or we go all the way back up to this high, we turn hard here. That's it. Like if it doesn't turn with confirmation or doesn't turn with confirmation, don't force a trade in this one. Euro Aussie, super volatile these last couple of weeks. This stock from Forex pair from 63 to 1.85. That's over 2,200 pips of movement in the last couple of months, right? From February to now. Yeah, over 2,100 pips. Go to a smaller time frame. We obviously react a little bit off these lows. If there's a topping pattern, it's capable of pulling back into finding some efficiency. But with that much volatility, don't be surprised if price comes back up. And it may have been that little spike on, looks like yesterday's high or Friday's high, I guess, is we may have tested the high and failed. So this position, right? You can see that's a little bit of a crown pattern. So we have lows. That's a nice little swing opportunity. Pulls back deep. I would measure that to symmetry. There's probably some more direction to the downside. So when I say symmetry, I mean this. That swing to that swing. And there's still some room to get there. So there's probably another maybe 400 to 500 pips of bearishness if you're trading smaller time frames to get to that symmetry correction. Okay, Euro CAD. I would say, I don't know, be careful on this one. There is some divergence at the highs. If you're looking for an opportunity to short it, I like this overbought condition with divergence. So maybe if price comes back up here, look for some smaller time frame confirmation, trade it back down to this support. Probably a few hundred pips from like 5,800 down to 5,400, but trade that with some confirmation on a smaller time frame. Euro Swiss, similar to my other Swiss crosses, some buy stop levels here. If I can spot a better bottoming pattern, then I'll shift these lower and I'll trade these back up into this resistance zone. I still think this has room to get up to parity again. 1.00 is going to be my Euro Swiss target if I can hang on to it. But we have some pretty strong support. I just don't want to get stuck in some type of like, hey, I'm gonna get really heavy at these lows. There's no lows. Like this market might still just drift lower. Eventually, I do think the market will respond, and the Swiss has been strong enough for years. I don't know if there's going to be an intervention necessarily or manipulation, but if these lows hold, I could see us getting back to any of these highs. Get back to this high, get back to this high, get back to this high, switch this structure a little bit, trade it all the way back up to that range level. It's like there's technicals to look for on the bigger picture, but this is why I'm keeping my trade size very small to not call the bottom. That way I can stay flexible. If I have to, dump positions, I can, but I think we still have some room to go up. Euro pound finally caught a trend. I mean, my gosh, this hasn't trended since a flash crash move in September. That was when the UK bond market broke. So, Euro pound just held really nice support around 8,300 and we're up 300 pips. Cool. That's about it. I'm not doing anything with it. I just thought it finally responded to the lows. I took several stabs at this Euro pound into the 200, into the 200, into the 200. I didn't hang on to that break to the upside. So it's fine. Euro yen, major support at 155, resistance around 165. You're in New Zealand, be careful. Watch your levels. Overbought conditions with divergence, similar to the Euro Aussie, maybe just selling back and finding some reversions. Euro dollar. Wow. Dollar index breaks the 100 handle. Euro dollar's up above 113. This is some open space. Look, to me, this is pretty enticing. If this is a wave 1, 2, 3, we could still be looking at Euro dollar heading up into the 120, 122 handle. It might be an unpopular trade right now. We are sitting at very overbought conditions. I wouldn't want to buy Euro dollar at these highs. I would want to pull back and get a swing first. Right now, like this low and this low, if this pulls back to a 38% or 50% or 618%, this swing looks pretty good to see if this is going to head higher. I don't know if you're going to get that trade. If we're going to go up here and then bounce around and it's a little bit of a flag and it goes up higher. I suppose it's open space, but we're getting on a daily time frame, overbought conditions. I'd like to see a pullback. So take this swing, look at your pullback levels and see what lines up. And then if you buy it there, stop loss below, look for some symmetry. I think we can get up to 120. You know, but I want to buy it at like 110 or 108 to make that run, so I'm not risking a ton of pips to the downside. Pound Aussie, way more volatile than Euro Aussie. Probably just resettling a little bit. I'm staying out of these pairs. Some of these are just super volatile. Pound CAD, same thing. Pound New Zealand, same thing. Pound Swiss. If you've got the margin for it, I know Pound Swiss margin is a little bit higher than the others. It actually is at a pretty good spot to be just averaging in. I think Pound Swiss can come back into like 112 pretty easily. We just have to look for a bottoming pattern. Pound Yen, I'd stay out of that one for now. Pound New Zealand, it's resetting. You know, we went up, we're resetting, probably coming back into this 144, 200 moving average. Pound dollar, it's moving well. I mean, still supported by the trend line. I think Euro dollar is a bit of a cleaner trade, but pound dollar could be revisiting this high around 34.40. If you're following shorter time frames, we're clearly in an uptrend right now. Buying a dip might not be all bad. New Zealand CAD responding nicely. New Zealand Swiss, again, buy stop levels. I'll be starting to shift these lower, see if I can get some new lows to get revisited, or this just starts making its way up, 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 takes out a low, pulls back here, give me a 3 to 5 wave move. And that's ultimately what I'm looking for a lot of Swiss pairs is if we have this capitulation move, we have a 1, 2, 3, 4, 5, and I'm dumping profit there. But this is a long ways away. You know, there's going to be wave cycles. It could be months in the making. So I'm just going to keep watching prices and just keeping the trade sizes small. New Zealand Yen, building off that August 5th low. If you're taking a stab at that, it's not bad. But, you know, it also wasn't the low. You know, you look left on this chart, you're like, oh, that's a great trade. And then, boom, it smashes you by, you know, 400 pips before it responds. So it was a tough trade. But right now, it's probably the pain has been felt, right? The retail crowd gets rushed out of it a little bit, and now it's a rebuilding. Maybe heading back up to that in this halfway zone. So if it stays shorter time frame confirmation to look bullish, I think there's room to trade it back up into the 200 moving average or so, maybe more. New Zealand dollar, nice rip. 5,500 lows, we're back up to 5,880, almost 5,900. Really strong support. That was a good technical level to buy and hold. So if anyone's holding the New Zealand dollar, that was a great trade. I was long at 56 and took some profit right before we had these previous highs. So I'm not hanging on to this any longer, but that was still a nice win for a few hundred pips. Is there open space? I mean, I hope so. I think this one has room if we go up here. Any pullback, you know, higher highs, higher lows. Maybe this goes up into 63, 6,400 if the dollar is going to continue to get weaker. Okay, dollar CAD. So pulled back into some nice resistance. In the short term, this may offer up some support. Oil really isn't showing any strength necessarily, so this is mostly led by dollar weakness. Oil's not really doing anything. I mean, CAD is giving back some gains. Aussie CAD is up. New Zealand CAD is up. CAD Swiss is still near the lows. I wouldn't be too aggressive on Aussie CAD. I could see it responding, but to me, this is almost a better trade if we go down to like 32, 31, or 30 again, as in like 1.32, 1.31, 1.30, and see if we do so inefficiently and then get a chance to trade this back into like some type of range. So either this thing turns now to head back up, or there's more, you know, dollar pressure, come back into major support and see if this turns back for another like 400 to 500 pip move. Dollar Swiss, pretty big breach of those multi-year lows. Again, if it's oversold with divergence, is it capable of pulling back into this cluster, this inefficiency, looking for a bottoming pattern to work its way back into that level? Maybe. We'll see what the manipulation looks like from the Swiss pairs. Dollar Yen. Well, we didn't really have much of a right shoulder. Okay, not much of a right shoulder. But the yen is still, you know, that pattern. High to low. This was a topping pattern that I was looking for an opportunity to short. It didn't pull back to the 50618 like I thought. That's why I was trading FXY. That's why I was trading 6J. I wanted to trade the Japanese yen strength with options. Also, they benefit from the dollar getting weaker and the Japanese yen getting stronger. So making money there, I would have missed my entries as a Forex trader waiting for the dollar yen to pull back to a 153, 154 handle. We just never got it. But we're heading back down towards these same lows from August of last year. So we could be looking at some near-term support on dollar yen. If not, measure symmetry. And that's what the yellow box is. So maybe down to like 139 or so. 140 is a round number. 139 is symmetry. So if you're currently short dollar yen, trend line break, bear flags maybe these last few trading days, I would just be moving stop losses and taking profits. Trail it. I don't think now is a good time to get into a fresh entry.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.